One more minute. All right, it's 1 o'clock, so we're still missing a few people, but we'll try to get started. We were looking at Chapter 10, Accounting for Not-for-Profit Organizations, and we left off after going through the first 21 slides, which was about halfway through the PowerPoint presentation. I thought I saw somebody appear and now I don't see anybody. Okay, so let's go to that PowerPoint. Let's see, share screen, screen 2, share. So now you are looking at the slide that says Statement of Functional Expenses. We finished off this one here talking about the Statement of Cash Flows. Statement of Functional Expenses is a matrix or spreadsheet of expenses where the columns are the program or supporting activities and the rows are the types of expense. It shows more detail than the statement of activities on how expenses are allocated to programs and supporting services. The purpose of this statement is to show the details of the entity's spending on direct programs activities versus overhead, which is the supporting services. It helps donors assess entity efficiency. Accounting for contributions. A contribution is a donation made to a not-for-profit organization, and they have a flow chart here on how and if to account for a contribution. It's tiny, tiny print, so I'm going to enlarge it as much as possible here. Okay, I don't think I can get it any bigger than that, and hopefully you can see it on your screen. First question to ask is, does the resource provider receive commensurate value in return for the resources provided? And by that, what it's really asking is whether or not the not-for-profit organization is selling a good or service at full price. If they're selling the good or service at full price, then what they're getting from the resource provider is equal in balance or amount or value to the resource the organization is sending to providing them. Okay, so that is an accounting way of asking the question if they're selling goods or services at full price. If the answer is yes, then it's a sale, not a contribution. And FASB 606, section 606 in the codification gives the standards for revenue recognition, and they would be followed. But if the money that's being given to the organization is not directly tied to some good or service that the person giving the money would receive or earn, then it's a contribution. So if it is a contribution, we ask if the resources are conditional. That is, does the organization have to do something before it can receive the money? If the answer is yes, then they shouldn't recognize the revenue until they've satisfied the condition. But they should discuss it in the notes. But if the donation is unconditional, that is, the organization doesn't have to do anything in advance to receive it, we have another question to ask, and that is if the donor has given any restrictions on how to use the resources. If the answer is yes, it's revenue, but it's revenue with donor restrictions. If the answer is no, then it's revenue without donor restrictions. And you should be glad that they're doing it this way now, because the previous standard, they had multiple categories of donor restrictions with confusing titles. So here there's more detail about what was in the chart. Exchange transactions. The first step is to determine whether the transaction is an exchange transaction that's reciprocal in nature or a contribution which is non-reciprocal. You might think of reciprocal as being a two-way street where goods and resources of equal value are going in one direction and then being returned in the other direction. But if it's non-reciprocal, it's one way, then it's a contribution. Reciprocal exchanges are reported according to FASB and counted as revenue. It's reciprocal if the resource provider receives commensurate value in return. That is, its measurement is corresponding to what the resource provider gave. If money is received in advance of providing the service on an exchange transaction, the amount received is considered deferred revenue. Transactions that are not exchange transactions are classified as contributions. So let's think of something you're more familiar with. Belhaven University. And what kind of transactions would be reciprocal, where goods or services are received by Belhaven University, but then Belhaven in return provides a good or service to the person who gave the money? And what would that describe?
I'm sorry, will you repeat the question once again?
Okay. So we are talking about when a nonprofit organization receives money from someone, how would we know if it's a reciprocal transaction or a contribution, that is a donation? If it's reciprocal, the giver gets something back. Using Belhaven as our example, what would that describe? Someone paying money to Belhaven, but then getting something back in return that they could accept as a donation on their tax returns.
Payment for a service?
It's reciprocal.
For anybody. So if it's students,
We're getting an education.
You get education back for money, the money that we're paying.
okay, so then is tuition a donation? Is it a contribution? No.
No.
Because students get something back in exchange for it. Now, suppose that there was an alumni who decided to write a check to Belhaven Scholarship Fund. Would that be a contribution, a donation, or is it a reciprocal exchange? Would that alumni get something back from Belhaven
No.
directly to the no? So that would be a contribution. Now, if it says it has to be used for a scholarship fund, is that a restriction on its use?
Yes.
Yes. So that would be a contribution with a donor restriction. Now, let's think about someone who got a fundraising letter from Belhaven and mailed in a check, but didn't say how to use it. And that would be a contribution revenue
Without restriction.
without restrictions. Let's go ahead and do one more example. A wealthy supporter of the college wrote a check to Belhaven for $2 million and said, you can spend this on the construction of a new parking garage. But there has not yet been an architect contacted in order to plan the building. It's not been decided where to put it on campus. How should Belhaven treat that? Is that a contribution? Not yet, because they have to start making plans and break down for the parking garage before they could spend that money. Then and only then could they regard it as a contribution. So hopefully this helps illustrate what we were looking at in that previous slide. Let's go back, take a look at it again. So here it's talking, I didn't click share. Reciprocal contracts, that's when the person paying the money gets something back in return. If they pay the money and they're supposed to get something back, but they haven't gotten it yet, that would be deferred revenue. So at Belhaven, deferred revenue would be like somebody paying tuition in advance. And so it would be unearned revenue for Belhaven, which is called deferred revenue, and then it would be transferred into actual revenue when the semester is in progress. But if it's not an exchange transaction, then it's a contribution. So contributions, including pledges, should be recognized as contribution revenue in the period received at their fair market value. However, conditional contributions are not recognized as revenue until the condition is satisfied. In other words, conditional contribution, the donor is saying, I will give to you if this happens. But it hasn't happened yet. So FASB is saying that's too early to count as revenue. And since you didn't get the contribution yet, it's not deferred revenue because you don't necessarily have an obligation to do what they want. Conditional promises to give are not recognized as revenues until the conditions are met. 2 requirements for a donor-imposed condition. There must be a performance barrier that must be overcome, and that's a stipulation that the recipient must meet in order to be entitled to the assets. So the organization getting the money has to do something in order to receive the assets. Second, there must exist a right of return or a right of release of the donor from its obligation. That is, if the organization doesn't do what's being asked, they have to give the money back. Donor-imposed restrictions are not the same as donor-imposed conditions. Conditions require some action on the part of the not-for-profit before the contribution is recognized as revenue, while restrictions are created by the donor when the donor imposes purpose or time restrictions on the use of the donated resources. They may say use it for a particular purpose, such as cancer research, acquiring capital assets, or permanent endowment. Additionally, they may restrict their contributions to future time periods. So they're not saying you'll get it if this happens. They're saying you will get this, but use it this way. Let's stop there. Questions or comments on that? Okay, then we'll talk about grants next. Government grants typically have both a performance barrier and a right of return. The result is that contribution revenue on these grants is conditional and recognized only as the conditions are satisfied. That means that contribution revenue is not recognized at the time the grant is awarded, but as the not-for-profit incurs allowable expenses. So a lot of the government grants for universities are money that's given to them to do a particular kind of research. If they don't do that research, then they can't get the money. Pledges. Under the accrual basis, unconditional pledges are recorded even before the cash is received. Record the receivable at the present value net of an allowance for estimated uncollectibles. If there is expected to be an extended time period before the gift is received, record the receivable at its present value. The present value will increase as the expected date of receipt approaches. The change in present value is recorded as additional contribution revenue rather than interest. Now, this means that if people make pledges to pay money to, let's say, Belhaven University, and when they make the pledge, Belhaven records it as revenue, even though they haven't gotten a check yet. Do you suppose that anyone ever promises Belhaven that they're going to give them a contribution and then they never do?
Yes.
Yeah, it probably happens a lot. And so you have to figure out how much of these pledges are going to be uncollectible. Now, let's compare this to accounts receivable. When a company sells something on credit, they record an account receivable, which indicates their legal right to collect the payment. And then they know that sometimes they can't collect at all, so they have an allowance that's set up. But they have the legal right to sue the customer for payment. I read of a case where a synagogue in Miami was going to build a new building, and the members of the synagogue pledged lots and lots of money because they wanted to look good without ever actually intending to pay. So the synagogue governance sued the people who made the pledges because once they started construction, they were going to end up having to declare bankruptcy because they didn't have enough money to continue. What would you think would happen if Belhaven started suing alumni because they didn't pay their pledges?
Then it will be hard for other alumni to donate or make contributions to the school, I guess.
You're right, because it really would not look very good for the university, would it? It would make them look really greedy and callous, and a lot of people would be reluctant to make pledges at all because they think if something happens and I can't pay, they're going to sue me. And what kind of administration is going to sue their own alumni? So I think that means that the estimated uncollectibles for nonprofits, when they're talking about their pledges, is going to be a lot higher than it would be for accounts receivable. Okay, back to share the screen. Contributed services. Should contributed services be recorded? And here's an example of a contributed service. You go down to the homeless shelter and help them clean their kitchen. Or you go down there and help them cook supper for the homeless people. So you've contributed a service. Should that be recorded as revenue? And the answer is it should be recorded as revenue only if it creates or enhances a non-financial asset or requires specialized skills. It was provided by someone possessing those skills and would have been purchased if not donated. So cleaning the kitchen is not a professional or specialized skill. So they wouldn't record that as revenue. But suppose that they had a new kitchen that was built onto the building, and the whole thing was done by workers from professional companies that were doing it in their spare time. In that particular case, then they would recognize those services as revenue and capitalize the cost of the services. So if they're recorded, how should they be recorded? If it's a non-financial asset, debit property, plant, or equipment for the value of the services, and credit contribution revenues. Otherwise, debit expense for the value of the services and credit contribution revenues. An example of this non-financial asset, suppose that this homeless shelter has a professional tax accountant come to them and volunteer his services to do their Form 990 and all of their other tax papers as a contribution. Then they could recognize the value of those services as revenue. Another example, a CPA firm might volunteer to do an audit for a nonprofit organization for free. And so the value of that audit would be debited as expense for its fair market value and then credit contribution revenues. Intentions to give. Pledges are recorded if they're unconditional. Intentions to give, oral promises, wills are often not legally enforceable, as the donors retain the legal right to change their mind. And even when collecting pledges can be legally enforceable, it would normally not be wise to sue your donors. Intentions to give are not recorded until the actual gift materializes. Now, how is this different from what we were talking about before? Before, it was more the example of someone got fundraising literature and filled out a card saying, I promise to pay X amount each month for the next year. You see ads on TV for organizations wanting to raise money that way all the time. So they could recognize that as a pledge and as revenue. But if they're just talking to someone who says, yeah, I'm going to put it in my will, that's a different story. Performance evaluation. FASB 117 says not-for-profit statements should be in a format similar to those of business companies. Revenues and expenses are measured on the accrual basis, but the bottom line change in net assets is not directly comparable to that of a business. And since many of the revenues are non-exchange, change in net assets is not a measure of organizational effectiveness. Revenues minus expenses does measure the effectiveness of a business because they're trying to make a profit. And therefore, net income is a way of assessing their profits. But this is a not-for-profit organization. So change in net assets doesn't really measure their success in their mission. Most commonly used ratio for not-for-profit is the program service expense ratio. Program service expenses divided by total expenses. Program services is the money that they're spending on the organization's mission, not on the supporting services, which is the overhead for management, general fundraising, and measurement development. So this is commonly used. How much of their money is spent on the program as a percentage. Often you hear 85% cited as a good benchmark, that at least 85% of the money that they have should be spent on their programs and only 15% on management and fundraising and so on. A high ratio of program expense will assure donors that the organization spends the bulk of dollars donated for its mission-oriented activities rather than for overhead. If you're concerned about donating money to help the non-governmental agencies help people in need, then many people think you should look and see which ones are most efficient at doing it. So the organization might need to keep detailed time records to properly report costs like salary associated with both program and supporting activities. Like they could have an employee who part of that person's services is supporting activities. Part of what that person does is program mission related. And because of the importance of the program, expense ratio care must be taken, allocating joint costs between program and supporting services. Depreciation must be allocated to the two functions on a reasonable, equitable, fair basis. Fundraising appeals sometimes also include program elements. And what they mean by that is that some companies say that their mission includes educating people about their mission. And therefore, when they send out fundraising appeals, they consider it to be advertisements that are telling people what their mission is. And so some nonprofits would like to say that their fundraising appeal is actually program rather than supporting service. So what's the criteria? Does the communication help meet program goals and functions? Who's the audience? Is it a general audience, not just last year's donors? And what's the content? FASB 124, accounting for investments held by not-for-profits, says that if a nonprofit organization has a portfolio of investments, that they should be recorded at fair market value and recognize the gains and losses in fair market value. What kind of nonprofit organization do you think would have a lot of investments in stocks and bonds? Let me repeat the question. What kind of nonprofit organization might have a huge portfolio of stocks and bonds? No G's. Okay, S, T are already. I and E, U, those are vowels. We got to get consonants first. Okay, Alex says C. Sorry, there's no C in it. Okay, Alex said D. No P.
Harvard University.
Harvard University. They have an endowment of billions of dollars of stocks and bonds. So if we go back to our PowerPoint, that means that in a year in which the stock market does badly, Harvard would record huge losses because of their portfolio. And in years in which the stock market does really well, they would record huge gains. Transfers to not-for-profits.
So, Mr. Goldsmith,
Yes.
so you're saying that they're currently recording a lot of losses right now?
They would be, because during this period of time, the economy, a lot of it is shut down and the stock market's done very badly. And so that would mean that Harvard University and other schools that have large endowments would have to record holding gains and losses in their financial statements. While a university like Belhaven that doesn't have much of an endowment, it wouldn't affect us that much.
How would they recover from that? Would they increase the price of tuition for next year?
No, because the endowment is large enough that even though it's lost value, it's still huge. And so even if it lost half its value, it would still be almost $1 billion in endowment. While a school like Belhaven depends on tuition for almost all of its revenue. Not all of it, but the vast majority. So that means when enrollment goes down, it's really hard on Belhaven. But curiously, when you have a lot of adults like Belhaven has in its online program, they tend to go back to school during a recession. So recessions in the past have not been that much of a problem for Belhaven. It's actually, sometimes we don't do that well when the economy's good. Okay, we've got just another minute to go. We've almost finished the PowerPoint for this section. We've got just a few more slides and we'll finish those on Monday and then start chapter 11.
Yes, sir.
So any other questions or comments before we do that? If not, then,
Quiz number 7 is already available, correct, sir?
yes, quiz 7 was posted the other day. I found out what had gone wrong, that it wasn't functioning correctly. And I didn't check yet to see if anybody actually took it.
I know I haven't yet.
So
Con la izquierda de la tira.
at any rate, I'll see you on Monday. Take the quiz, check to see what homework is due, listen to medical advice and be very careful. And I'll see you again on Monday.
See ya.
Thanks.
Talk to you then. Bye.
See ya.
Bye.